The S&P 500 is, I don't know whether it's 80% of the market value of, of everything you can buy in there.
Every investor is worried about one word: inflation. Inflation can cause a huge headache to people who do not know how to use it to their advantage. In this video, we'll be discussing Warren Buffett's concepts of making money during inflation. Keep watching. According to Labor Department data issued in January, consumer prices jumped 7% in December compared to the same month in 2020. This compares to a 6.8% increase in November. Inflation in the United States is now at a nearly 40-year high. Many investors are undoubtedly asking themselves, how can I protect myself from inflation in light of these figures? Many experts propose investing wisely to protect against inflation in general. To hedge against growing costs, Suze Orman recently advised on her website that you should keep investing in stocks, and Ramit Sethi remarked that investment is the single most effective strategy to get rich. Individuals can suffer from inflation if they simply keep their money in a bank account and do nothing with it. But what kinds of businesses should you put your money into? Here are some of Warren Buffett's quotes over the years. During a 2015 shareholder meeting, Berkshire Hathaway's CEO and chairman noted that the best firms during inflation are the ones that you buy once and then don't have to keep making capital investments thereafter, while any business with heavy capital investment should be avoided. He recommends real estate as a good investment during inflation. You can buy it once and profit from the increase in value. Nevertheless, he advises against utilities and railroads as suitable investments during inflation. Buffett also said that the best way to protect against inflation is to invest in yourself and your skills. If you're the best teacher, if you're the best surgeon, if you're the best lawyer, you'll get your share of the national economic pie regardless of the value of whatever the currency may be, he said at a 2009 shareholder meeting. The second best protection is a good business, he says, referring to a corporation whose products are in high demand. The company has to hike prices. Buffett may have spelled it out as clearly as ever in a 1981 letter to shareholders, writing that companies that tend to withstand an inflationary environment must have two characteristics. 1. An ability to increase prices relatively easily even when product demand is flat and capacity are not fully utilized without fear of significant loss of either market share or unit volume, and 2. An ability to accommodate large dollar volume increases in business, often referred to as capacity expansion. All of this said, maybe the most important lesson that individual investors can take away from Buffett is that you should stick to the tried and true strategy instead of trying to pick individual stocks, whether we're in an inflationary environment or not, of having and holding an index fund. Buffett stated at a shareholder meeting in 2021 that I do not believe the typical person can pick equities and that the S&P 500 index fund is one to have for a long time to people. Inflation continues to hike the price of commodities in the United States, from automobiles to gas and groceries. Last month, the price index, which measures how much people pay for various goods, increased by 5.4% from July 2020, making its highest increase since 2008. Despite the fact that some economists and financial professionals claim that the present inflation rate is unimportant, inflation has become nearly impossible to prevent. Warren Buffett, CEO of Berkshire Hathaway, believes that some enterprises are more likely to prosper than others when it comes to investing. During the 2015 Berkshire Hathaway annual shareholder meeting, Buffett was asked which of his company's holdings was best positioned to thrive during a period of rising inflation. Buffett's response: "The best business to buy is one that doesn't require constant reinvestment because the cost of doing so rises as the value of the dollar falls." The best businesses to be in during inflation are the businesses that you buy once and don't have to keep making capital investments after that, Buffett said, adding that any business with heavy capital investment tends to be a poor business to be in inflation and often a poor business to be in general. He explained that utilities and railroads are gobbling up more and more money and aren't as profitable. He prefers to be the owner of businesses with which people have a personal connection. Instead, Buffett added, a brand is a good thing to own during inflation. Brands like See's Candy, which he owned since 1972, fall into this category for him. Of course, most ordinary investors cannot purchase entire firms, but they can purchase shares in companies they admire. Owning a piece of a magnificent firm, as Buffett put it in 2009, is advantageous since the company's product will always be in demand regardless of the currency's value. Buffett also stated that owning real estate during inflation advantages because the acquisition is a one-time outlay for the investor and has the extra benefit of being resold. If you have something helpful to someone else, it's usually valued in terms of replacement value over time, so you really receive the inflationary boost, Buffett explained. Still, most investors' best course of action is to invest in low-cost index funds, which are significantly less hazardous than picking individual equities that they believe will perform well. Buffett has long advised investors to invest in these funds, which own every stock in an index and are thus automatically diversified. For example, Apple, Coca-Cola, and Google are all represented in the S&P 500. Buffett recently told CNBC that diversified index funds make the best sense practically all of the time for consumers wanting to build their retirement savings. Keep buying an S&P 500 low-cost index fund. Buy it through thick and thin, and especially through thin, he said in 2017. When inflation rises, there are two primary ways to think about it. One is that prices are rising, while the other is that the dollar is depreciating. Earning more money is a relatively safe answer, regardless of how you look at it. If you are unemployed or one of the millions of people who have lost their employment due to the Great Resignation, consider using any spare time to improve your skill set and position yourself for a higher salary. You can use those abilities to start a side business as a freelancer, or you can go through the newest job openings to find a new position with a higher salary and greater advanced chances. Stocks have typically beaten inflation by a large margin, making them one of the most effective hedges against increased costs. Invest in sectors of the economy that may gain from rising costs, such as food, technology, building materials, and energy to take advantage of inflation. Many new apps can assist you in making market investments. Consider the advantages and disadvantages of each, choose the best option for your financial circumstances, and get started. Inflation fears frequently refocus interest on hard assets like gold and silver. Both commodities have performed well over the last 5 years, with gold's value increasing by 52% and silver's by around 49%. You can invest in precious metals directly by purchasing coins or bars, or you can invest in exchange-traded funds or ETFs which contain commodities in their holdings but like stocks. You may add gold or silver ETFs to your portfolio with the help of popular investing apps. Real estate has shown to be one of the safest long-term investment options available. In recent years, the housing market in the United States has been on an upward trend. Compare mortgage offers to get the best rate if you're preparing to buy your first home or if you already own a home and want to upgrade. Mortgage rates are still at historic lows, with the average 30-year loan recently falling below 3% for the first time. The borrowers with the greatest credit scores tend to get the best mortgage rates, so do everything you can to improve your credit score a few points. When inflation rises, interest rates typically rise as well. An increase in inflation will result in greater interest charges if you have any adjustable rate debt, such as a credit card balance or a home equity line of credit. This is especially true in the case of mortgages. If you have an adjustable rate mortgage, you should discuss refinancing and switching to a fixed rate with your lender. This will ensure that you pay the same interest rate until you decide to sell your house or refinance at a lower rate. Not everyone thinks the recent increase in inflation is a harbinger of long-term concerns. According to Warren Buffett, Americans still have money to spend. In May, he told his Berkshire Hathaway fans, people have money in their pockets and they pay the higher costs. So, if your current financial situation allows you to withstand the higher prices, you may wish to ignore the hype and, with no effort, make some extra money in the stock market by using a popular software that allows you to invest your spare change. Did you find this video informative or helpful? Let us know in the comment section below. Make sure to subscribe so you don't miss out on my future videos. Don't forget to like and share.